my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of the Chicago soybean complex. I'll start with Chicago soybeans. Beans in the teens and hesitating this time. The weekly key reversal up seen 2 weeks ago was the start of the latest sharp move higher. This after spending most of 2021 within a gently rising bull channel, currently 1379 to 1482. Last week was the pretty superb follow-on to that weekly key reversal up, punching up and outside the bull channel. Indeed, last week I actually set out some ideas on what may be ahead, and I quote, "The market has utilized the ammunition provided by the upper bull channel line to launch a move higher. We now have overhead the 2014 high at 1521, and then the neckline, currently 1574, of the old 2010-2014 irregular head and shoulders top. There are two things that must now be considered. Firstly, an initial topside target X for the bull channel would be in the 1596 area. Secondly, let's look at the whole December 2020 to date action as elements of a bullish measured move up, in which case we may look at an initial target X1 in the 1533 area, elementally doable, and a full target X2 in the 1634 area. These are levels to keep an eye upon." End of quote. Well, what has happened since has hit some of those numbers right on the button, but perhaps not the way initially anticipated. I suppose one can start with the indecisive doji cross last Friday. This was the first indecisive pattern in this run-up and the first indecisive doji cross since mid-March. This was the first sign the market was having altitude issues. Nevertheless, last Monday's fresh bullish white soldier reached up and achieved target X1. Initially Tuesday looked the same, if stronger, but it ran into the previously highlighted resistance of, and I quote, "the neckline of the old 2010 to 2014 irregular head and shoulders top," end of quote, and stopped dead in its tracks. Indeed, the market started a pullback that eventually turned into a combined bearish engulfing pattern and shooting star type 1 bearish, closing back below the 2014 high at 1521 after only 1 day closing over it. Then we had yesterday, one of the largest examples of indecision that I've seen in a while, a long-legged indecisive doji cross. It seems yesterday the market was weighing the possibilities of travelling higher or lower and couldn't make up its mind. Today will be likely a bullish engulfing pattern. Well, it looked that way initially, but it looks like it's changing as we speak. Not that much of an ask, as the previous session was an indecisive doji cross, but we could end up with another indecisive doji cross. However, most of all, I'll be interested to see, can we close tonight or in the next few days, let's say tomorrow, over the 1521 level? That may be the key in any next leg higher or back lower. Chicago soybean meal. The weekly key reversals up recently seen in both soybeans and soybean oil, but not here in soy meal, had an indirect action showing that this market is not immune from the bullish incentive seen elsewhere. Though we did not make a weekly key reversal up here 2 weeks ago, prices still nevertheless rose, punching up through the medium moving average, currently at 417.70, and the recent 50% Fibonacci line at 423.5. However, despite having ammunition from the 400 to 405 area, it does not look enough. The action in April can be compared to what happened back in March, when prices spent roughly 3 weeks in a range accumulating ammunition and didn't manage to reach 435. This time we had barely a week down there, and to be honest, I think it was a pretty good effort to push up over the 50% Fibonacci line. Tuesday's bearish engulfing pattern led to yesterday's fall and today's test lower. So why does it look as if we may be having a hesitating doji cross initially today, but now moving into a bullish pattern? Well, the key here is what happened last time in March and to what happened now. In March, we had a big move up and down, but only one close over the medium moving average and none over the short medium moving average, currently at 413.90. This despite a big move up over both. Compare that to last week and this. We've had multiple closes over the short medium and the medium moving average, as well as the 50% Fibonacci line. This is why the market is hesitating. It's because we now have the additional support of the two moving averages below, something that was not there in March. This now leaves the question, what next? Will prices try back higher or not? So far, it looks like the medium moving average has held, and we still have the short medium moving average below in reserve. The indecisive looking nature of some of today's market seemed to indicate the market was also wrestling with that question, now popping up over the 50% Fibonacci line at 423.50. Well, maybe it's trying to find an answer that way. Chicago soybean oil. Five Fridays ago, the market broke down through the lower tine of the acute late November 2020 to mid-January 2021 bullish Andrews pitchfork. I subsequently retired it, but I think I'll quote the end of my commentary from 6 weeks ago, which covered this situation, and I quote, "Please note, the incentive is still bullish. We are still within the bullish Andrews pitchfork, and until this is retired or substituted, that is the way." Well, after retiring the bullish pitchfork, would I think the bullish incentive is still there? It is because I found a new substitute. The mid-January to end of March action bullish Andrews pitchfork. I did also have a bullish shift pitchfork for this action, but this week prices have punched up and stayed above the upper tine, so it has been retired. This segues nicely into last week's action. A good move higher that ran into a congestion zone, 57.64 to 58.82, dating from early last decade. It took until the start of this week to punch up through it, in the process no doubt expending some of the bullish ammunition, as the action afterwards showed some distinct indecision. That was based around the 2011 high at 61 even. On Tuesday we saw the market peak just under the upper tine, currently at 64.31 of the bullish Andrews pitchfork, with an indecisive doji cross with an exceptionally long ton and within reach of target X, the possible measured move higher target from the 2021 action so far. This indecision was repeated yesterday as well, with an indecisive long-legged spinning top that, because of Tuesday's action, could be seen by some as a bullish engulfing pattern, though I would not venture to give that view personally. Then today, the market seemed to have had enough and has tried lower, but then run into the same congestion on the way down between 57.64 and 58.82 that slowed it on the way up, only this time the support seems to be a bit stronger right now. And this is because we have the middle tine of the pitchfork, currently at 58.86, running through it, something that was not there last time. So what now? Well, target X still sits there enticing on the upside. The middle tine is in support, something that was not there last time, and that is where I think it comes down to. Will the middle tine be enough to see a resurgence higher? Right now it does appear to be acting that way, but caution. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.